Ladies and gentlemen, welcome back to the channel. The stock market has made a new all-time high yet again today. In fact, 3 new all-time highs in 3 trading days. This is the last day of Q2. And what we're seeing is fascinating. A lot of risk on in markets, also some defensives catching a bid, and a little bit of hedging in portfolios. We will discuss this throughout this video and what it could mean for Q3. As you guys know, I think an AI super cycle is coming, and that's definitely the direction positioning is heading in today. As a little spoiler alert. Beyond that, we do have a lot of news to share from Scott Bessent, Hassett, Trump, and Fed speakers today. Actually a ton of news. So that's going to take up a good portion of this video as well. Ladies and gentlemen, let's go ahead and get into all of this. Hit that like button and subscribe to the channel. If you guys have not joined the trading community yet and you are looking for big returning small cap companies, but maybe you don't have the time to go through hundreds of them every day and filter out the good ones and the bad ones with my selective focus on AI, that's where I want to be. That's where the growth is. And certain biopharma stocks as well definitely look appealing right now. Then check out that link down below in the description of this video. Come try it out. Come join us. Ladies and gentlemen, with that said, let's get started. So the big news overnight last night that sent the markets higher and really on a strong note to start the morning, Canada rescinds their digital services tax after Trump cuts off U.S. trade talks. The move comes after Trump announced over the weekend that he will be terminating all discussions on trade with Canada. The first payments from Canada's digital services tax were initially set to be collected Monday. The tax would have applied to both domestic and foreign tech companies with a 3% levy. Canada's Minister of Finance and National Revenue, Francis Philippe Champagne, added, "What a name is that? Wow, that's a name." He said, quote, "Rescinding the digital services tax will allow the negotiations of a new economic and security relationship with the United States to make vital progress and reinforce our work to create jobs and build prosperity for all Canadians." Now, as we talked about over this weekend, if we get a trade deal with Mexico, with Europe, with China, India, other Southeast Asian countries, it wasn't the end of the world to not get a trade deal with Canada. But now that we're back to the negotiations table, that is a positive for markets. First and foremost, this morning we had Chicago PMIs that came in at 40.4. Last month was 40.5, so kind of unchanged from last month, but the expectation was 44. So again, just some regional data, but did come in on the weaker side. The Dallas Fed Manufacturing Index came in at negative 12.7 versus estimates of negative 10. So bad there as well. Group raises the tech hardware sector view to market weight, which again just highlights how behind Wall Street firms always are. U.S. Treasury Secretary Bessent says, "I am confident that the tax bill will progress in the coming hours and Trump will sign by July 4th. Bessent says this is a start in controlling U.S. debt. Bessent says we're going to bend the curve and get the debt level down. Bessent also says the Republican budget bill will help grow the economy while controlling and bringing down expenses. Bessent asks, why would we borrow longer term at these rates? So basically what we're doing right now, what the government is doing, what the Treasury is doing, is they're funding the government on shorter duration bond auctions, right? There's a lot more of those shorter duration bond auctions. When rates come down is when you're going to see a lot of those longer term bond auctions to lock in lower rates, lower yields for longer. Besson says we could see a lowering of rates and that inflation is very tame. Besson says as we see inflation come down, the whole curve can drop. Besson, when asked about speculation over Fed chair, says I will do whatever the president wants, but I have the best job in Washington. Besson says he will be working on Powell's successor in the coming weeks and months. Besson said the Fed made a gigantic mistake in 2022 on rates. And he says we have seen no inflation from tariffs, which is true. Besson says the Fed seems, quote, a little frozen at the wheel here. He says there will be a flurry of trade deals going into the final week before the July 9th deadline. He says that nothing is more transitory for inflation than tariffs. Besson says that countries should be aware that we could spring back to April 2nd levels on tariffs. Now, we all know what this is. This is the art of the deal. Create chaos, create a threat, okay? The threat is we go back to those April 2nd tariff numbers. If countries do not actually negotiate and make concessions and, play hardball, basically. He says if countries are recalcitrant, tariffs could go back up. And he says that any tariff negotiating extensions will be up to Trump. JP Morgan's traders say it's time to get bulled up again, which again, I talked about this relentlessly in the past couple of weeks. Once you hit a new all-time high, that's when everyone's going to get bulled up again, if you will, if I can use those words. That's when everyone's going to start chasing again. That's when, the bears that we accumulated in this last 20% drop need to come to reality and say the odds are now 80+% that this is not a bear market rally, that, you've hit a new all-time high. You tend to continue to hit new all-time highs. You don't just tend to hit one new all-time high. It's like many in a row, right? Which we've in fact hit 3 new all-time highs over the last 3 trading days. Like one of the biggest green lights in markets is new all-time highs. It tends to lead to a larger rally as people start to chase, and even as short sellers start to cover on short positions. Like if you are a short seller and you've been betting against this market, like new all-time highs is probably the moment you want to say, hey, we should just cover on that short position. Fed Bostic, in a speech today, says advanced warning on tariffs has allowed businesses to manage the process, which I think, just in all fairness, like the consumer is not in a place where you can just raise prices and, do it like that. Like people are not, this is not 2021 again, right? This is not 2022 in the early part where people had like a bunch of extra money. People are cutting back. If you're a business and you're raising prices, like you're going to sell less. That's why we haven't seen inflation. Bostic says there's a lot of uncertainty where trade policy will go. And Bostic says that tariff impacts will play out over time. He also says that businesses' response to tariffs could stretch into 2026. I don't believe that. Again, what response can you really have if you can't raise prices? Because consumers won't pay higher prices. Okay? It's not, the Fed is so under-equipped from a knowledge perspective how to deal with this situation. It's incredible. He says the risk of tariff-related inflation affecting expectations is an open question. Again, these Fed officials are incompetent. They're paralyzed to do anything. And, man, I was Team Powell for so long, but I'm just really anti-Fed right now because there is no logical explanation why you would be this hawkish, in this environment. Maybe the Fed really thinks the economy is stronger than it actually is. Maybe that's what's going on. But if you're an average family out there, again, you may not be defaulting, you may be skating by, but you're just skating by. You're not thriving in this economy as an average working family. Fed Bostic also says that much of the tariff pricing hasn't worked itself into the economy yet. Which, good news is, though, with a new, essentially, Jerome Powell coming to the Fed, whether that's Bessent or Hassett or whoever it ends up being, I think the markets are really looking through the Fed today. I think the markets are looking at 2026 and they're saying, hey, we're going to get a new competent Fed that is going to cut rates, you know, save the economy from a recession. Like, we've been constricting this economy, like choking this economy out for years. Okay? That can only last for so long. But Wall Street's saying, hey, couple more months, we get a new Fed that's more competent, that knows what they're doing, economy gets better, and boom, that's why you're at new all-time highs right now. Bostic says we need more information to know what's next for monetary policy. Again, I think all of the information in the world wouldn't change the Fed's opinion here. It's actually interesting in the book that I've been reading, The Psychology of Money, again, in like the second chapter, it shares, like, depending on when you were born, if you were born in a high inflation economy, your views of inflation and inflation expectations and, you know, A plus B equals, you know, C or whatever your inputs are it you know, changes, right? Your bias towards inflation changes based on what you experienced growing up. So a lot of these Fed officials that maybe were growing up in the 70s that experienced inflation, you know, are a little shell-shocked here, a little nervous because of their prior kind of childhood experiences with inflation. And probably 2022 and 2023 as well, when we, you know, seen a lot of inflation. I think they kind of think the economy is just stronger than what it is. And yeah, that's not the case. Bostic says uncertainty over outlook is more than just trade policy driven. Again, that makes no sense. Incompetent Fed is all I hear at this point. Trump will sign an executive order on Monday related to easing sanctions on Syria. Fed Bostic says, quote, I'm still there on expecting one cut this year. Fed Bostic said, I penciled in 3 rate cuts next year. White House senior advisor Hassett says we're still on track for July 4th deadline on tax bill. Hassett says he supports coal, natural gas, and nuclear for AI power. Bostic says that tariff inflation is the question of when, not if. Again, this is so opinion politics at this point. It's crazy. Or opinion policy at this point. The Fed is no longer data dependent. What happened to that? Okay. What if the consumer is not willing to, you know, endure price hikes, so companies cannot raise prices? What happens if AI helps to alleviate some of, you know, internal margins, right? Raises margins, so profitability is not too affected by tariffs and companies can withstand it. What if Chinese companies, you know, pay some of that tariff? Okay? There's a lot of other ways that this could play out, not just an inflation increase. Hassett says that Trump has strong views the Fed could lower interest rates. Hassett declines to comment on whether he'd be the next Fed chair. Hassett says that nations should expect wrath if they have a digital tax. He also says we will have a marathon session on trade deals, suggesting that we're going to get a bunch of trade deals quickly. Fed Bostic says the job market is stable and there is a low desire from businesses to hire or fire workers. I think that's the only thing I can actually agree with that Bostic said today. White House will restart negotiations with Canada immediately, Hassett said on Fox this morning. Hassett on Japan and the EU says, quote, we'll see how it goes. And White House senior advisor Hassett threatens Japan and EU if digital taxes remain. And this might be the most hilarious quote, okay, of the day. Fed Bostic says, I don't believe there's a need to raise rates to combat inflation. Raising rates shouldn't even be anywhere remotely near the conversation. Imagine how how mad Trump would be if the Fed started talking about raising rates. I kind of want to see it just to see like how Trump reacts, but that's just delusional. Bostic says the big debate on whether businesses can fully pass on tariffs and what consumers will accept. So here on the day today, the percent of stocks trading above their 50-day moving average coming in at 67.61%. That's actually down from Friday's number when you were at 72%. So you're actually down a little bit today. The AI Investor Sentiment Survey last week showed 35.1% of investors were bullish over the next 6 months, 24.7% were neutral, and 40.3% were bearish. So you have over 5% more bears versus bulls, and almost 25% of investors who are neutral. Like, there's a lot of steam left in this market. And the CNN Fear and Greed Index today is coming in at 67. Friday's close was at 64. So you're kind of midpoint of greed, a little bit on the higher side. Market momentum is neutral. Stock price strength, extreme greed. Stock price breadth, extreme greed. Put and call options, extreme greed. Market volatility is neutral. Safe haven demand in greed, and junk bond demand also in greed. Now, what's fascinating today and worth mentioning is that while the indexes are up, the VIX is also up 5% today. Now, why is this important? Well, today is the last day of Q2. So tomorrow is the start of Q3. So what you're seeing is a little bit of hedging. But what I really find fascinating is some of the highest beta stocks, some of the, big AI winners that we've invested in the trading community are up. One of them's up like 12% today. Others in the biopharma space up 6+% today. It is a great day for our portfolio. Okay. So there's some profit taking in some areas, but there's a lot of buying in more speculative, high growth areas as well. And there's some hedging going on. Now, you can see the Dow is up almost 0.5%. S&P is up 0.25%. NASDAQ up 0.25%. Russell up 0.14%. So there is a little bit of a defensive trade. At the same time, there's that risk on trade. So it's a very weird day for the last day of Q2. So again, the positioning today is definitely tilted towards risk on for Q3. Now, July is historically, over the past 10 years, the best month for stocks, with an average return on the S&P around 3.5%. It's technically like 3.45% or so is the average July return over the last 10 years. As you just hit a new all-time high, heading into July with trade deals coming, the tax bill getting resolved, no inflation, a decent economy, earnings expectations at all-time highs. Like, this is not the market you want to fade, in my opinion. We are set up very favorably at this moment in time, from my perspective. But again, hey, what do I know? Let me know what you guys think down below in the comment section. Ladies and gentlemen, have a great rest of your day, and I will see you in the next one.